Yeah, I think we've hit a extreme here. ICI just reported that August outflows alone were 17 billion. So for June, July, and August, we had about $63 billion come out of domestic mutual funds, and that's really comparable to the end of 2012.
You know, it's interesting. Mark Yusko, who runs a fund of funds out of North Carolina, a very smart guy, had a tweet this morning that I loved. He said that investing is the only industry or business he knows that when things go on sale, everybody runs out of the store. It sort of runs counter to how we think about everything else in our life. Why do we do that?
Right. Well, like many things on Wall Street, overshoots to the upside and downside. So if you look at the end of 2012, right, you had basically a market correction. Market dropped the end of 2012 about 9%. And what preceded that period was a sustained period of very bearish news, negative headlines, negative mainstream. And that led to the sell-off about 9–10% into the end of 2012. And so that led to basically the lagging indicator is the mutual fund outflows, which totaled about $63 billion for that 3-month period for October, November, December. And I think what's very relevant here is if you look at the 3 concerns and the anxiety that was caused for those 3 months, it was caused by the Euro debt crisis, concerns about slowing China economy, and concerns about the U.S. budget and the fiscal cliff. So that sounds eerily familiar to what we're going through now. And just after that period, call it beginning of January, the fiscal cliff, that got resolved. The ECB stood behind the euro, and China's domestic GDP picked up a little bit, caused emerging markets to pick up, and you had this 5-month run from Jan 2013 to May of about 20%. And I think that's really relevant to what we're seeing now, very comparable.
Roberto, do we need to see a pickup in small caps, though? Because we did see the small caps breach the August lows, the August flash crash lows, and they've sort of been flat on their back ever since then. Don't we need to see that turn around in terms of leading indicators for the markets? Right,
and usually, right, very, very good point. The Russell 2000 being the small caps is a barometer for growth, usually leads both in and out. But what's interesting here is if you looked at all of the 4 major indices that made death crosses recently, the Russell, just made it as the S&P was pulling out. So I think at this point we have kind of the tail wagging the dog type thing, and I think that we've overshot to the downside. We had a successful test of the August 24 low. While price action here structure is kind of not the greatest, and I'd like to see another test of that August 24 low and maybe get to the 1870-ish area in the S&P and then bounce higher from there. But should all these kind of macros get, fixed up, called by Jan 1st, I think we could have a significant run in the early part of next year.